This video is going to talk about 5 common business owner investing mistakes, and then there will be 5 tips for improving on it. So one of the first and most common mistakes I see is not investing at all. And what I mean by that is not investing in financial assets. So every business owner is invested in his or her own business, and it's tempting to keep investing all the profit, any extra money back into that. It's an idea like stick with what's working, and it can be very powerful when times are good. But the issue is what if things go wrong? What if you can't work anymore for some reason? What if the business climate changes and your particular niche goes away? So the problem becomes you're over leveraged into the business, and if that business goes away, then the net worth, maybe even the income that you can generate, disappears. A second mistake is not taking advantage of compounding. So this can happen when, say, you are dedicating some of your income, some of your profit to investing. You're taking a piece maybe every month, every quarter, every year, and you're moving that into an investment account. But that next step of actually picking an investment, getting it working for you, and then letting that compound over time, maybe that's on hold because you need more information, or you're just too busy running your business and you haven't been able to make that decision yet. And so over time, it can really hold you back. It's important that once you are investing, that you make sure that the cash is always working for you. A third item is piling on illiquid investments. So the risk to this is one way that I see this most commonly is with real estate. So as a business owner, odds are that you own the entire thing or a significant share. Maybe there are a couple of partners, maybe a spouse owns a percentage of the business, but there really is not an obvious buyer. These are not companies with stocks trading on the exchange. Maybe if they are, maybe that's restricted stock. So the issue becomes when you have some cash flow that you can dedicate to investing, and you look around and maybe the business that you run, that you own, occupies a building or a warehouse, and it's for sale, and you think, what if I stop paying rent and I own my own building, or what if I become the landlord of another building and then I rent that out? The issue is that, again, when it works and everything's fine and it's a good economy, that can be beautiful and it's great. You can have nice cash flow from real estate investments. The problem is, what if all of a sudden there's a need or just a desire? You want to upgrade the personal residence, or there's a business opportunity and you want some capital to take advantage of it. Sometimes right when the moment is perfect for that kind of an opportunity, it may not be the best time to seek out financing or to sell a property. And especially just like when we are in the middle of a bad market or a recession like we've had this year in 2020, that can be the worst time to try and realize some liquidity on real estate. So just making sure that as you get invested, you know where your liquidity is and it's adequate for your personal and your business plans is very important. A fourth mistake that we can see from business owners from time to time is ignoring retirement plans. So if you've started up a business and it's fairly new, maybe the last thing on your mind for a while is, there's so much cash flow. I'd love to spend a bunch of time figuring out and structuring a 401k plan, or is the 401k even the right way to go? What about, I've heard of a SEP plan, I've heard of defined benefit plans, what is it? And it can become daunting, and there are too many choices, and it gets put on hold. So it's important to eventually put it on the calendar, take advantage of that. It can create really powerful tax deductions. It can definitely create long-term compounding and get that working for you. And then also to mention, if you have created a retirement plan, that's great, but don't ignore it. You still have to make sure that it's sort of modernized. And one thing in particular to think about these days is, does your 401k have the option to make a Roth contribution? So this is timely as well, as we near 2021. there are changes to the deductibility of retirement plan contributions that are being discussed politically. And one of the big hedges to this, if you're one of those people for whom it might be a problem, a way to hedge that is to you could convert your balance to a Roth. You could also switch your ongoing contributions from the regular deductible contribution to the Roth contribution. It's definitely something to think about individually for 2021, depending on what the rules end up. And then number 5, this happens a lot. It's kind of a scary one, which is estimated taxes. Many business owners have to pay estimated taxes, and the last thing anybody wants is to have a problem with their taxes or to have a surprise, to have penalties, and to be told, hey, you have to write a really big check and it's due in a week or two. So what it often will lead to is an overreaction in the opposite direction. There will be oversaving for estimated taxes. And the issue with it is if you don't put in the energy to really get a handle on what your tax bills are going to be, and you're a cautious person, like many are, and it's good to be, you could end up with double, commonly, the number that you actually need to pay your estimated taxes. There can be extenuating circumstances. Maybe there's a phantom income situation happening, or maybe you just don't know until right at the end of the year if you're going to receive a big distribution from a venture or partnership or another kind of investment. That all makes sense. But these are the kinds of things that are good to be aware of well in advance so that you don't feel obligated to have a huge percentage of your net worth tied up in cash when it could be working for you and compounding in the markets. So those are 5 potential mistakes that can happen. Here are 5 tips. One of them is to delegate the investing. So this is going back to the issue of not finding the time to make decisions and execute on those decisions. If you can find a relationship where you can set the direction, have confidence in that, maybe have some standing orders in place about how you want things invested when you're able to make contributions, then that can solve a lot of these problems. That can get you in the markets. You can formulate a plan to take advantage of timing, high points or low points in the markets if that's part of your plan. And that way it can be, to a degree, set it and forget it. You've set the direction. You don't have to worry moment by moment about whether you're doing the exact right thing at the right time. You've got somebody watching that for you. And then part of the process, of course, is to check in periodically. It could be monthly, it could be quarterly. If you're really hands-off, maybe you check in once a year or semi-annually, and then make sure that the direction, you're verifying that it's what you want it to be, and then you can go back to work in the business and keep the compounding going. A second tip is think about a defined benefit plan. So this is kind of an unusual suggestion, especially for the small to mid-sized business owners. We're so conditioned to immediately think about a 401k or a SEP if we really want to keep things simple. But there's a lot of power, especially for employers, business owners who are over the age of 50, maybe closer to 60. And if there are maybe fewer employees, then it can be really powerful. I'll give you an example. You can get $25,000 very roughly into a 401k each year. You can get multiples of that. It can be $100,000. It could be $200,000 potentially that your company can contribute to the defined benefit plan for the business owner. There may be some contributions required if there are employees. That can vary, but that's extremely powerful. To go from deducting around $20,000 to deducting 6 figures year after year is a huge change. It's not commonly known, so I mentioned here it's definitely something to think about. A third tip is consider that Roth 401k option. If your plan has been around for many years, it may not have been available when you first set your plan up, or maybe it seemed new and confusing. Maybe the record-keeping firm wasn't on board with that, so they didn't recommend it. But now's the time. Make sure that your plan offers it. Make sure that all the other parties involved with the 401k are aware of it and are able to operate with that. And then the fifth tip is, the fourth tip The fourth tip is plan for estimated taxes. Keep in touch with the accountant. If it's a fairly typical year and you are getting, at 6 months in, maybe it's November or the 11th month of your fiscal year, and the cash has been building up because you're just not sure about taxes, maybe send that email, make that call, get a sense of just how much more you might need, or if you know you've saved well in excess of what you're going to need for estimated taxes, then you can go ahead and get that invested. The fifth tip is think about insurance, especially if you're very invested in the business or other illiquid assets. Maybe the real estate has come into play. It's because think about when that comes into play. The insurance, it can be a combination of disability and life insurance. But if you're the business owner and you're so key to the business that the business effectively stops if you can't work, then this can be the measure of comfort that lets you say, okay, even though I'm illiquid, at least I know I'm protected in this way. Or if you're thinking about making a big illiquid investment, maybe double check on the insurance side and make sure there's enough there that you're comfortable. Even if your business has simply scaled up over time, it's important to take another look at the insurance and make sure that that's been scaling appropriately too. So those are the 5 tips as a business owner to make sure that you're moving in the right direction with your investments.